Joining in on the show right now. Dr. Raghuvanshi, great to have you today on the show. Thank you so much for your time. I'm just looking at your performance, and oncology growth has slowed sharply to about 5%, down from what used to be a much stronger growth driver for you. Tell me, how is it that you foresee this moving forward? Because you did guide to oncology growth normalizing to about 10 to 12%. When do you see that happening?
Thank you for having me. As we have always stated that oncology is a segment which is going to continue to grow at a very fast pace. The incidence of oncology, longer lifespans are leading to a larger population which requires therapies for cancer. And that is why we have been focusing on growing our cancer portfolio. Now, the reason why this growth looks tapered now is for two reasons. One is we are now moving from a larger base. So there's some bit of base effect. But one other major factor which has led to a slightly lower growth is the control on the discount mechanism which has been evolved for the cgHS and ECHS patients. Typically, about 20% of the revenue comes from these two segments. And there has been a new system where the drug prices have been sort of reduced to about 30% margin on the MRP, which in some cases is even sort of higher than the cost price. So the margin has got severely eroded over there. So that is one of the reasons. But we still believe that oncology is going to be one of the major drivers. And we are continuously investing on that segment as well. We are putting up a proton. We are in the advanced stages of discussion to decide on the final negotiation with the companies. And also at the same time, we are opening our new cancer center in Manesar over the next 2 months.
And if you can, hi, this is Harsha, by the way, sir. So just trying to get a perspective, FY28, your 25% hospital EBITDA margin target, is that achievable, just given the way things are playing out on ground? Give us a sense of that first.
Yeah, we are very confident that we would be able to increase about 1.5% EBITDA year on year. We have built in some expense which are very justified and which will give us very good long-term results. Like, for example, our costs of ESOPs, etc., which are sort of temporarily, it is looking that the profits are slightly lower. But yes, we are very much on target. Many of our hospitals, which like, for example, the Manesar and Greater Noida facility, they have already become EBITDA neutral, and they will positively start contributing from the next quarter. And all that will lead to a better profitability margin.
And what about the cgHS, I beg your pardon, and ECHS, the onco drug cap? How is that expected to hit revenue? Could you give us maybe a number, quantify it for us to give us a perspective of what's playing out there?
Yeah, so this is a kind of a mixed I would say, impact. There are positives as well as negatives. The one I mentioned about the discounts which they expect on the MRP of the drugs, that is one part which is lowering the revenues. At the same time, some of the prices of procedures as well as diagnostic tests, etc., have also been enhanced. So net, it is still a positive impact and not a negative impact.
The other thing, Dr. Raghuvanshi, I wanted to talk about was Manesar, because, that continues to be a drag. And you've pointed to oncology equipment commissioning back in November as the turning point. How confident are you about holding that timeline?
Yeah, no, we are absolutely confident. Manesar has actually performed reasonably well. It's a new geography, new market, which is not such a developed market. We are only about 18 months into our operation, and we are already, as I said, EBITDA neutral. We are rather positive. With the addition of oncology segment and opening of additional beds as well as occupancy going up, currently it is functioning at about 40% occupancy, and we have not yet opened all the beds. So with the starting of the oncology services, we are going to open the rest of the beds as well. And the occupancy is continuously going up. And in the current month, it is about 55%. So we expect this occupancy also to go up to 60% on an enhanced bed base. So with that, I think with Manesar, we are very happy with this hospital.
And what numbers are you pricing in for Agilus Diagnostics? Because that's already showing a healthier mix.
Yes. So Agilus, as you know, that had underperformed into both in terms of growth for and profitability for some time, has started showing positive results. We have done a lot of changes in the operational system and rationalization of lab network, opening of new consumer touch points, etc. With that, that has come to a slightly healthier growth, and it is being growing now at about 10% on quarter on year on year. So that is still slightly lower than the industry growth, but the number of consumer touch points which we are opening, we are fairly confident that that growth will come to the industry standards. As well as when it comes to profitability also, it is currently trending towards 25% EBITDA levels, and we expect it to perform slightly better as we go forward.
I have to talk about the parliamentary committee as well, and the recommendations on capping private hospital room charges at nearby 3-star hotel rates. Quantify this impact for us if this were to be enacted.
Yes, so it is interesting. I mean, the headlines which is becoming. People are missing the woods for the trees, and or the other way. See, the thing is, if you go through the entire report, the bed charges is only one of the components. They are talking about several other things, and then on that, it is not just the room rent, but they're saying that you can charge the nursing charges and all other charges related to patient care, which are not in a hotel, but in a hospital. Hotel and a hospital cannot be compared. People come to the hotel to relax and enjoy the room, but the hospital room is not for relaxation. There is a lot of elements which go in providing comprehensive care to the patient in the hospital, and there are costs associated with that. So I think that approach is probably wrong. So I am sure that the policymakers would have enough consultation and thinking before it is actually implemented or in any form. However, there are some other elements in that which I find little, concerning. One of them is it talks about reducing FDI in healthcare. Now, that is a very dangerous thing because in India, we have only about 100,000 beds in the organized sector, which are of good, high quality. Whereas if you compare this to United Kingdom, which has a population much, much smaller than ours, and that is, they have about 200,000 quality beds at the similar level. So India needs a huge investment in infrastructure, and that capital is only going to come through the foreign investment. So that part is very important, and I think that is something which should be seriously looked into and not any kind of populist move to be made around that.
Ashutosh, I want to go back to Agilus just for a minute. So you seem to be confident that you'll hit the 15% growth, which is the industry growth, fairly quickly. How quickly? If you can give us a perspective, any internal timelines that you have in mind as to how quickly you can hit that number?
Yeah, so I can't give you an exact timeline at the moment, but as you might be aware that we have recently had leadership change at that business division as well. So I'm very excited with the new CEO, Mr. Vijender Singh. He has a lot of industry experience and is known for producing a good growth. We are very confident that that will happen. But I think that should take at least 2 to 3 quarters before we can reach to a comparable standard.
Okay, so yeah, absolutely fair point. And would there be clarity as to what the new plans of Vijender Singh are, and what the kind of targets would be? Is there some clarity around that? Is there a timeline where we get clarity around that?
Yeah, so we are working on that. It is early on, so he's just reviewing the entire organization portfolio. We also have been working on a transformation plan for last few months. So part of that plan is to recalibrate our lab to collection point ratios. So the network rationalization is one of the major things which we are looking at. So with that, I think we should be able to achieve what we have set ourselves for. So we definitely want to have the industry level of growth as well as the EBITDA level. But we also are very conscious of the fact that we had lagged earlier. So we will have to move at a faster pace to reach to really be competitive with the peers. So we would aspire to achieve a higher growth than what the industry growth is, but that is not going to happen in a short term, not over the next couple of quarters, but certainly within a year's time.
And on FMRI, last off, just trying to get a sense, when does the occupancy certificate come in? Is there a timeline out there in your mind? And in terms of how you scale up, is it going to be a phased scale up of the 200-bed project, or is it going to be a one-shot, put out?
Yeah, so we are in the final stages of getting the necessary occupancy certificate, etc. Part of the certificates, fire clearance, all those things have already happened. It could happen any day within probably next fortnight or so. We are going to commission the entire facility together. We are currently operating at about 85% occupancy in this hospital. So the demand is already there. So we will commission beds, of course, in phases, but we would have the entire facility is ready. So we will keep on opening new floors as and when the occupancy goes up. We want to keep the occupancy level at least at about 70-75%, even with the enhanced bed base. So that is very much on track.
Right, Dr. Raghuvanshi. So good chatting with you. Thank you so much for your time today.
Thank you for having me.